Hey guys, how's it going? Val Venture Investing here today. So today we're going to be talking about what's going on in the markets, what's going on in the broad market indices as a whole. Of course, we saw that record drawdown in a record amount of time as of late here, and then now we've seen the market pull up about 25% and just skyrocket really quick. So I think it's got a lot of people confused as to what's going to be happening in the future. Are the markets going to continue to tank after this? Is this a bull trap? Or are we going to see new highs or match the highs that we saw here not too long ago relatively soon? So in this video, I'm going to go through my thoughts on what's going on, what I think is going to happen. I'm going to go through both the positive and the negative of all the news that's been happening in the last little bit here. I've basically been just sitting on the sidelines, analyzing this, picking my time, and trying to digest all this information that's been coming out, and I think I got a pretty good feel for it now, and that's why I decided to make that video. So make sure you stay to the end, because I'm going to be going through a lot of different data here that I think is very beneficial for a lot of people to see. Maybe a lot of people are not looking at this very closely, and if you're wondering whether you should buy right now or sell, I think a lot of this information can help you. Of course, always do your own research, but the more information that you have, based upon what's happened in the past, that's a good thing. So we're going to start with the negatives here, okay? Probably one of the biggest negatives that came out lately is this right here. Of course, we're talking about unemployment, and specifically record unemployment, not in terms of total, but in terms of how fast it's been coming here. This is an article from Bloomberg here. It states that more than 5 million Americans filed for unemployment benefits last week. And of course, this article was just posted a couple days ago, bringing the total in the month since I won't say the word, throttled the U.S. economy to 22 million, effectively erasing a decade's worth of job creation. So now we're seeing 22 million people who are unemployed. I mean, I think that's going past what a lot of people expected. It's just crazy. So don't get those two numbers mixed up, the 5 million and the 22 million. It was just 5 million last week, but now we're seeing about 22 million unemployed, and we're getting pretty close to the Great Depression levels. I never thought I'd be saying that. The article continues on here. Initial jobless claims of 5.25 million in the week ended April 11th, followed 6.62 million the prior week, according to the Labor Department figures Tuesday. The median estimate of The Economist was for 5.5 million, with projections ranging as high as 8 million. And of course, they say here the 4-week sum compares roughly 21.5 million jobs added during the expansion that began in the mid-2009s. The latest figures suggest an unemployment rate currently around 17%, far above the 10% reached in the wake of the recession that ended in 2009, in a sign that the effects of shutdowns have spread well beyond an initial wave of restaurants, hotels, and other businesses. And of course, the article continues on here. I can let you read it if you want. You can pause the screen here now. But the thing is that these levels, I mean, at the Great Depression, I think we're about 25%. We could be getting close to that now. So I'm not too sure if we're in the peak. Personally, in my own personal opinion, I don't think that we are in the peak, but we might hit those levels, and man, is that crazy. And in terms of weekly claims, that's a record. My next biggest concern, of course, I think this is a concern of a lot of people, is that this thing might take off again once lockdowns are restricted. Of course, there's also been a lot of talk about people being able to get it again after they've had it, like this article here, where there was 140 survivors that are retesting positive in South Korea. So we don't know what's going on going forward, and that's what's scariest for me. I mean, initially, I didn't think this was that big of a deal. I made a video about it, but then I quickly kind of changed my mind and thought this might be going on for a lot longer than I thought. So there's been a lot of talk about that, and of course the US right now is pushing for these antibody testing, but we're not there yet. So what's going to happen going forward? What are we going to see? Is it going to be something similar to that? That's very concerning. Of course, another issue is the printing of money. I'm just going to briefly going over this and the inflation that might ensue after this. And if you're not too familiar with inflation, but this is basically going to be the loss of purchasing power, is one of the effects of it, right? And things, when inflation goes high, usually the Federal Reserve likes to jack interest rates. And since things are really grim right now interest rates are going up. I don't know. I mean, this is, just a guess that they might do that. We might see quite a bit of inflation, hard to say, but I think it's safe to say with pumping this much money into the economy, almost like free helicopter money, that there could be some knock-on effects afterwards. So thought I'd briefly mention that as well. Of course, PEs, price to earning ratios, in terms of the broad market indices are pretty high as well, considering what's going on right now. I've been taking a look at the S&P 500. Of course, this is an estimate, about over almost 21 times earnings, which is reasonable, but if you look at it in terms of before this occurred, not too far off, and we have a lot of issues going forward. The biggest issue that I see going forward, of course, is that we've seen this kind of price movement before. And what I'm talking about when I say price movement before, I mean this retracement up that we've seen. So what I'm going to do now is I'm going to go back, not all of them, but we're going to go back to about 1929 here and walk our way forward. And I'm going to show you how things have happened in the past, because generally speaking, markets do kind of repeat themselves quite a bit. I mean, this is very different this time around. There's nothing systematically wrong with the system as a whole, right? Like in '08 or anything like that. But still, it's something that bears a lot of resemblance. So let's take a look here right now. So this is going back to 1929. Of course, this was a huge drop. Now you see from the peak here, I've got these little arrows down, and then there's a little bit of a shaded region in between, just to give you a little idea how to read this here. But the first drop we saw, if you could say that was reminiscent to what we, just had, it was down about 37%. I mean, of course, I'm looking at longer time periods here. You're not seeing all the choppiness, so keep that in mind. A lot of that smoothed out. But still, these are some pretty key levels here. And we saw it drop over 37%. Then after that, we saw it rally almost 20%. I mean, it was over 16%. These are just rough numbers. And then if you look from there, of course, it dropped again, rallied a little bit, dropped again, rallied a little bit. But in total, we saw the drop after that go down about 88%. And, you could have easily been pulled into that bull trap there when we saw it recovering there about 16%. Likewise, in 2001, the tech bubble, this one was a little bit more choppy, but from the peak here to about what I would consider one of the major lows, we saw about 23, almost 24% drop, and then we saw it rally again, almost 18%, that 20% level again. I mean, it was something that kind of had maybe a lot of people wondering if it was over. And then what happened from there, peak to trough, we saw about a 35% drawdown. We saw the stocks just tank after that last little bull run there. So quite similar to the last example that I gave. 2008 was interesting because it had a lot of these. If you can see from the peak down to this first level here, we saw it where it consolidated a bit, dropped about 16%, and then we saw it rally back almost up 12% there, and then again we saw it drop, rally a little bit, drop even further, rally a bit more, and then of course drop even further. You can pause the screen here if you want to take a look at these. I didn't do all the drops, but I did a lot of the pops here, and then as you can see, from the peak at the top here to the trough at the bottom, we saw over 53% drop. So definitely falling in line with those other examples that I showed you. Again, 2016 here. This one looks a little bit different. It's almost like a head and shoulders pattern here. This one was quick. Quite frankly, I don't even remember this one that much because it was relatively quick. But the first drawdown here, we saw it draw down almost 12%. So that's a pretty healthy drop. And then we saw it basically rally up almost to the same levels, not quite as much, 11.6%, somewhere around there. And then we saw it drop again about the same amount. And then so you saw from the peak to trough, it was down about almost 13%. So you may have been fooled by the first one, the little bull, we'll call it the bull trap here, but then it dropped again. 2018 is the one that's most recent in our memory here, and although this one was quick, it still did follow a relatively similar pattern. It dropped about 9.11%, 9-10%, and then it rallied up almost half of that, about 5%. It rallied back up, and then it dropped further. So from the peak to trough, it was almost 12% drop before things started to smooth out and rally into the future. So where are we at right now? Taking a look at today as of late, wow, this looks eerily similar to what we saw in the past. Of course, this happened really fast, this drop here, about 33%. We saw a drop just so fast, and now we've seen it rally up about 26%. So very, very similar to what we've seen from the past. And of course, we're less than 15% off the highs here right now. So only 15% off the highs. I mean, I don't know, take that for what you will. But to me, that's a very big red flag considering what's going on and all the unknowns that are going forward, all the things that I talked about. And also just the, how markets tend to react to situations like this, drawdowns and then retracements. I don't know. So again, leave some comments down below what you guys think of that, because I thought that was pretty interesting. So let's look at some of the positive things right now going forward. We started with unemployment on the negatives. Let's start with unemployment on the positives as well. So taking a look here, I can't take credit for this. This was tweeted by this individual who's the head of research at this firm here. But this is something that's actually quite well documented and known. And the thing is, usually stocks bottom before jobless claims peak. And here I have a screenshot of what he tweeted. Here's in 0203 and 0809. And as you can see, well, let's take a look at 09 because it's the most recent here. The bottom was on March 9th, roughly 2009, and that's when we saw the peak claims. But the question is, of course, are we at peak unemployment claims? Personally, I don't think we are, but if the economy opens up again, we could be, and that's some good evidence to suggest that we actually have bottomed. Likewise, in terms of bottoming, I'm talking about New York here because this is probably the epicenter of the US and maybe the whole epicenter of North America, I would say. The curve is slightly flattening. I've been watching these news briefings here. This one was on CNBC. And this is in terms of total hospitalizations. Of course, this is too early to tell, but we're always being told about flattening the curve here, and it appears to be happening. Of course, they're still having 2,000 a day. But it's at least manageable that their system is able to handle it. So we've seen it turn around there a bit. But of course, the concern is, like I said, if they open and they're still having 2,000 a day, the spread that could occur, and then it could cause another lockdown or other things to happen as well. Some of the biggest news I think that drove the stock market as of recently here was the news story that broke about a possible cure. I'm not too sure if I'm saying this correctly, but it's remdesivir. And it's an experimental drug that was used to treat Ebola, actually, and it can combat a lot of the symptoms. Of course, this is produced by Gilead Sciences, and it's actually being talked about by the World Health Organization as being a potential cure. From what I understand, it's not a cure in terms of a straight up cure. It's just something that can help lessen the symptoms early on from some of the doctors that I've heard. And of course, it's still just being clinically trialed right now. I believe that they're testing it on human beings right now, so it's being accelerated really quickly. So it's obviously not a cure all end all sort of thing, so to speak, but it's definitely showing a lot of promise, and I think it's something that has been driving the market for sure. Of course, the stock for Gilead has been skyrocketing. I don't want to touch it right now in terms of these volatility going on in the stock. I don't really want to talk about or touch it, but here's a look at it right here if you guys wanted to take a look into it. And of course, the most recent news that came out is Trump's plan to reopen the states. He's basically saying, and he is right, that the economy can't stay closed forever, and he's planning on opening it in phases, right? And of course, it depends on some of the areas that you're in. New York versus another state that has hardly any, but they're opening gyms and stuff like that first. So of course that's a positive, but again, like I said, that's something that could be potentially negative if we're not done yet, like I mentioned in some of the negatives at the beginning of this video. But definitely something that's very been driving the market a lot. And of course, the Fed has talked about not being done in terms of stimulus. They had that $2 trillion bill come out, which has been very beneficial, but they've signaled that they're not done. So I know there might be some more injections, liquidity injections and such there. So in conclusion, there's a lot of negative There's quite a bit of positive. I think that the negative outweighs the positive. Personally, my biggest concern is when things start opening back up, or God forbid in the fall when flu season hits and colds and stuff like that are more prevalent, that it comes again. And so none of us know. And obviously you guys know, I'm not an expert on this. Nobody knows what's going to happen. Like I said before, if somebody tells you they know what's going to happen, they're lying to you. So those are my concerns. So, it left me in a bit of a dilemma, as I'm sure it's left you in a lot of dilemmas as well, is, well, what do I do? Because I regularly invest. Should I hold off? Should I continue investing? Of course, the advice that you should take, for the average person should take, is you invest no matter what. Doesn't matter what's going on. Long term, you can't beat the market, you can't time the market. And generally speaking, that's correct. For me, following it quite closely, and that these are some pretty specific, very unique circumstances, I've held off a little bit. But seeing the market pull up a bit, I think what I'm going to be doing is maybe just deploying $2,000 to $5,000, somewhere around there, no matter what happens in the next week. And then if things tank down like I think that they might, there's a good chance, say it's better than a 50% probability that we retest those lows, but again, who knows? Then I'll be deploying the same thing, doing it again and again, kind of thing, right? So play it by ear. The key is to kind of dip my toe in the water, of course, in some good names. Like I mentioned in my last video, I'm very interested in Air Canada. I love Fortis. I love high dividend yielding stocks. Start there, dip my toes in, see what's going on, because I think that there's going to be a lot more good buying opportunities in the future. So, love to know what you guys think. Do you think this is over? Do you think we're going to test the lows of before? Comment down below, tell me what you think. Again, don't forget to like the video, guys, and subscribe. Really helps the channel out. So that's going to be it for today, guys. See you in the next one.